Welcome back, everyone, to the Risk Intel podcast, powered by SRA Watchtower, where we share risk intelligence with experts from across the banking industry. I'm your host, Ed Vincent, CEO at SRA Watchtower. Welcome back to the Risk Intel podcast. I'm incredibly excited to have two special guests with me here today from Vantage Bank. Joel Castaneda, who is the Executive Vice President and Chief Risk Officer, and Shawn Main, who is the Chief Business Architect at Vantage Bank. Joel and Shawn, thanks very much for being with us today.
Good to be here, Ed.
Thanks, Ed.
Let's start out by giving our viewers a little bit of background on each of you guys, and then we're going to get into some topics today around modernization of a risk program and the impact of data and technology in achieving that. But we'll start by providing a bit of a broader context around the strategy of transformation at Vantage Bank itself. So I'm excited to have each of you weigh in on these topics. Joel, can you kick us off with a little bit about your background? What's on your plate now? How'd you get to Vantage? And then Shawn, we'll go over to you.
Yeah, absolutely. So I'll be quick about it, but I started in 2007 as a regulator. So right out of college, OCC examiner, went through that training program. Then I went to a community bank, having some credit issues, worked through different areas, credit risk, BSA, AML, operations, various areas in the bank. Kind of learned a lot in that compressed time frame. Moved on to a larger regional bank, spent a lot of time deep diving into operational risk kind of across the spectrum there. Also helped facilitate the build of an ERM program for that larger bank. And then back to Vantage Bank, when I was working at a community bank that was a predecessor to Vantage Bank, I had interacted with one of the current board members of Vantage Bank, and he tapped me on the shoulder one day and said, "Hey, we're growing. We're looking to build an ERM program. We'd like you to come help us build it." So that's how I landed back at Vantage Bank, and 4 years plus here.
Awesome. I'm going to come back to one of the things you mentioned there around, right, what did you find when you walked in the door, right? What does it mean to build an ERM program and the culture that you encountered there? But before we delve into that, Shawn, over to you, a little bit about how you landed in this chair.
Well, interestingly enough, my very first job was actually in bank operations. I actually ran check processing for a small $60 million bank. And then I kind of did a lot of other operational duties there, ran the old ACH machines and wire machines. They used to be, physical machines that were underneath your desks.
Awesome.
After that, I basically became a racker at Rackspace. I ran, development for their team. I did a lot of engineering there. So I really cut a lot of my teeth on the technology side at Rackspace. Then I eventually came back to Vantage Bank. Back then, it was actually called San Antonio National Bank. And they needed a CIO to come help them start up a de novo bank. So I'll tell you, that was definitely fun. Growing 12 branches within a year to actually get a bank around. Probably the craziest couple of years of my life for sure. Learned a lot then. I was kind of a little bit of a solo person with some kind of MSP help there. But then over time, as Vantage grew and eventually acquired IMB and became the Vantage Bank that it is today, my role basically transformed from cashier of the bank to CIO to now the Chief Business Architect.
All right, let's thank you for taking us on that journey. Let's go back a little bit there to the roots, because I'm wondering if that plays a role in the whole concept of being a business architect and the transformation that the institution has gone through. When you began right with that de novo step in the journey, right, you've got a true clean sheet of paper at that point in time, but there still has to be a culture and a vision. And so what was it back then? And then, right, you fast forward and you acquire institutions and you've got to mesh cultures and systems and what have you. I'd love to hear a bit about what that original vision was and what you encountered along that way, and then get into, right, the transformation, right, that you've embarked upon more recently.
Well, that is probably a story too long for this podcast. But in the end, I came in with my own vision for what needed to happen from a technology perspective. But at that time, it was a very different culture from executive leadership. They really just wanted to build a bank that would serve the underbanked at the time, and they wanted to expand and grow as fast as possible. And so really my job at that point was really just to make sure that the lights were on and the infrastructure worked. But that leadership did change over time. And obviously the focus there was, hey, let's make sure we've got something that's sustainable, something that we can grow the bank with. And then as we started to, get into this mode where we combined the two banks, that leadership changed dramatically again. And I would say really when the combination occurred between IMB and Vantage, that's when the bank finally said, look, we really need to transform this bank and start acting more like a 10, 15, $20 billion bank. And to do that, we're going to have to put a lot of things in place to make that happen. And that started with technology, that started with the right people, that started with a development team, so that we could transform our business at the pace we needed to, and really start to put some of that some of the maturity in that we needed as an organization to do that right. Because if you don't do it early enough in a transformation process, it just becomes all this tech debt that down the road you eventually just have to go back and clean up. And that's really where a lot of big banks are today, is they're stuck in this cycle of, we didn't do enough early on. And so now they're having to do a whole lot of kind of retro and cleanup and of all that technical debt. And so that was really, I would say, culturally, that's obviously when, Jeff and the team kind of started to really ramp up. That was very important to us, is to establish the shared services team that I'm on, my role, and then also kind of the, I would say the culture within IT and technology, to make sure that we're focused on that future vision and not so much, just keeping the lights on.
Do you feel like there's inertia before you get started? Right. And you mentioned that, especially in institutions that perhaps do have, a lot of water under the bridge, right? Some tech debt and the like. Is there when you guys acquired IMB, right, that could have been a moment that actually caused inertia. It could have been a moment where you said, all right, we're just going to stop. But that didn't happen. It sounds like you went the other direction. You really leaned in at that point in time.
I did, for sure. And that was my mandate, is to, be a change agent, to be someone who affects culture. Because you're right, when you bring two organizations together, or really even when you in some banks, you try to just get two departments to work together, you're really trying to kind of unify culture and kind of gain an understanding, and really gain some empathy for, what those individuals are doing within, other sides of the organization or within different departments. And so, that's effectively what my mandate was, is, go out and learn what everybody's doing, figure out how to help them, look for solutions, and really try to be a change agent from a technology perspective, and just have a more broad view of what's occurring across the organization versus just, kind of, what's happening with an individual department or within an individual process. Because I think that's often where a lot of banks get stuck, is they just focus in on what they need to do because we all have so much work to do, and we have so many check boxes to clear, that we just kind of get in the rut.
I may be oversimplifying this, but you talked there about the I'd say the narrowness versus the breadth, and you talked about taking a broad view, and I think even about the something as simple as a title or a description of a role, and where as chief information officer, right, might have some, I'll say, parameters around it that says this is data or technology or systems, whereas the role you're in, a business architect, feels like that cuts across, right, process and people and technology, and that's just a different approach to solving this problem.
That's right. I mean, if you kind of go back to what you mentioned about how I got into this industry, the reason I'm in my role is because I do understand the operational side of the business. I do have kind of, my hands in the business aspects of what a bank needs to do. And I think that's really important, because if you just take a technology view of things, you can get very technical. You can find solutions, but you may not always be finding solutions that really helps the business. And so my goal is to really have a good swath and breadth that covers all departments to build cross-functional teams, to build reports and data that serve the greater business and the greater need. And so I'm able to basically dissect that by saying, I understand the pain point from the business and I understand the technical challenges that come with that. So how do I merge those together so that I come up with the best solution that supports both sides of the business?
All right, I'm going to come back in a second to that point about the pain point from the business. And Joel, I think that's where I'm going to pull you in a second. But let me ask you one last question here, Shawn, because you mentioned there about reports and data, and that's certainly something that we've talked about in the past. And so when you thought about your priorities and your order of operations, if you will, and what do you tackle first, how did you think about data and aggregation, consolidation, normalization, all the work that goes into that? Where did that fall on the priority list?
Priority one, and will remain priority one for the longest time. I kind of put it into a couple of buckets. One is access to data, which is extremely hard for banks. Two is workflows built around that data. And for us, that's ACE, and giving people the right data at the right time. Building the governance infrastructure around that data so that you can properly secure it and it's good quality data. And then that leads into the ability to leverage things like AI. So if you can get those first three right, you can then start to leverage AI to optimize your processes in the back end, to get data to the right people at the right time, and then really leverage those tool sets a lot more because it's, again, bad data in, bad data out. So you've got to get those first things right before you really move on to AI or even consider it.
All right, you've laid the foundation here. Joel, right? You now walk in and say, all right, you've been given an opportunity to envision and build an ERM program, right? What do you find when you walk in the door? I mean, it sounds like Shawn has figured it all out. I mean, he's got the model, it's access to data, workflows, governance, piece of cake. You're just going to come in and you're a use case, just put it to work. What'd you find?
Yeah, so number one, it started with the risk culture, right? So what I found, and I'll give you a little bit of background on how that evolved, but I found experienced bankers that knew the laws and regulations and understood risk, right? So I was like, this is perfect, right? What a great template to start from. Then second was we had the data infrastructure, which is still maturing, but it was I think light years beyond what for an asset size community bank that was. I think we were about 1.8 billion at that time. We're now 4.5. Access to reports and metrics and data. I was like, okay, so check. All right, this is easy, right? Well, the part that needed maturing was, okay, how do we build the frameworks, a common language, how we talk about risk, how we report, right? So culture was there, access to data that were there, some appropriate tools were there. It was just layering in the formality of how we build a ERM program, how we all speak the same language. And when the culture was already there and the systems already there, that was the path of least resistance, right? So coming in, I put those frameworks in place. So a little bit of interesting history about the bank in addition to the people, right? So one of the predecessor banks, Shawn had mentioned it, INB, had gone through some regulatory action. Usually you come out of that and you're way better from a risk perspective. You got knowledge. So some of those people were still at the bank that had gone through that, right? That bank was also held by a foreign organization that was publicly traded. So some of the governance elements of being publicly traded in a different country are also embedded in there, right? So in addition to all the experience, there was some additional components that help with the risk culture and some of the processes in place.
Did you then when you walked in the door have so I understand what you found, right? There was a risk, there was a culture of risk that was quite thoughtful. There's some systems and infrastructure. And you then leaned in and said, all right, I'm going to overlay frameworks and processes and so forth. Did you have a clear vision for what that was going to look like?
I did, and I laid it out, I would say, in the first few weeks. And my biggest advocates and partners going back to culture, Shawn as our chief business architect, our CFO and our chief credit officer, and then our CIO and our chief operations officer, right? So all of them understood the vision. I articulated it. We formed a ERM committee, and very early on, within the first few weeks, few months, we are all kind of marching towards the same vision. So really, it was just putting a bow around all the disparate processes, everybody managing risk, kind of siloed, right? What you usually see, bringing that all together and being able to aggregate and report was really where I focused.
Right. So coming at it, so job one there then being, right, there's still silos, right? That's common, right? We hear, right? So break down those silos and as quickly as possible get a holistic view of risk. And it sounds like forming that ERM committee gave you the mechanism, if you will, to bring those people to the table together.
Absolutely.
Shawn, when Joel walks in the door and says, "All right, I'm going to get after it here on the risk management side," what does that mean for you at that point in time?
Well, it depends on what he needs. It depends, right? That's the typical answer from any technical
right
guy. But in general, it's back to what he was asking about. How, first he knows I need these data points to make this part of my program successful. I need to be able to collect this information or pull this report. And so really kind of back to that first point of access to data, right? He can't do his job if I don't find a way to get access to our data. And so typically that's kind of the back and forth that you'll find is as he's iterating through, hey, I need this data point, we go back and say, okay, well, do we even have that information? What system are we using today that lets us get access to that? And that's often where we open up kind of that idea of, oh, well, this might be a huge gap. Gosh, maybe we need to go look at something to augment our technology so that you can start to collect that data, because we don't want to do those things manually, because it's super important that we automate the heck out of this stuff, because there's no way to build scale or efficiency without that.
And I'm going to, that's a good teaser for I think our next conversation about scaling a risk program and use of technology and AI and so forth. But I'm going to table that for the next time. But I do think there's something in there that you mentioned that I'd like to pick up on. You use the phrase back and forth and iterating, right? And I think that's a very different approach for a technology team to have that where and expecting that you're not just sitting in the back office as an order taker, right? You're also not just going to build something and if you build it, they will come, right? It needs to be a situation where there's collaboration. It sounds like the two of you have figured out that dynamic, that there's a lot of interaction between you and the teams.
Yeah, I mean, I think I'd add to it that, culturally, even when Joel arrived, right, we were building that iterative agile culture, which you most often find in the tech company. And that was part of my mandate as well. You can kind of see that as why I'm on the technology and business side. My goal is to bring those two things together. And agile is kind of the epitome of that. It's taking the technical people and literally connecting them to the business so that you can really understand what their needs are, so you can come up with a better solution versus the kind of, I would say it's the waterfall approach, but it's even how most, kind of legacy IT departments approach things. They just say, I need to implement this project over the next 8 months, and it's going to have these requirements, and I'll see you at the end of it. That's not how you can operate anymore.
Yes. As we were talking here before we started recording today's conversation, we talked about the speed of movement, and you said 8 months there, and I just can't imagine that that's in the vernacular at Vantage Bank. I don't think that anything takes 8 months. Right? It's just a different mindset, right? You've got to move quickly, right? Joel, you mentioned it, right? Around the speed with which you guys make decisions, and that's a differentiator, right? That helps you punch above your weight.
Absolutely.
Joel, let me ask you a question to go back to the risk data, right? You talked about that, that coming together to give you a consolidated picture of risk and breaking down the silos. How did you go about that process? And right, what's the type of data you looked at? How did you figure out? Was this you saying, this is what we need? What kind of interaction was there with the business? Kind of take us through a bit of that part of the journey, if you would.
Yeah, so the first thing as part of our ERM framework, I mentioned it earlier, but that common language, right? So I looked at our strategy, I looked at our mission, I looked at our value system, all that was documented, right? So good place to start. And then, putting all that together, and I said, okay, what strategically, what kind of risks are we taking? How do we map that into our terminology, right? So we laid out 9 principal risks. We carved out technology risk out of operational, given how focused we are on building the technology and what Shawn's team is doing. So once I had those 9 laid out, okay, so let's drill in, and you got your typical metrics, right? That you're looking at from a credit risk perspective. I mean, everyone's familiar with. You see them on the call report, right? So those were there, established, understood. But getting into the operational risks, like kind of what unique risks do we have, right? The technology risks, some of our business processes that are unique to Vantage, right? So once I mapped that out, then I said, okay, these things are important. How do we determine which metrics underneath those are even more important? So we came up with a list, right, of if this were to go wrong, how would you feel, right? And kind of benchmarked, and that turned into our risk appetite and our formal statements and metrics, and that kind of evolved and got more mature. So really, that's the way we approached it. I would say the other thing is the first hire that we made as a risk department was somebody to come in and work on the risk data, right? So that was within six months of me starting, and that person and Shawn's team worked so close. I think maybe 6 months after that, we said this person should be in shared services, not working for risk, with a kind of hub and spoke model where that person and his team were, just risk was a part of it, right? Because there's risk data as a component of our overall data strategy, and there's a lot of data that is used for the business that we also use for risk, right? You asked about that. A couple rich data sources. Obviously, we picked up the ALCO package, and okay, let me see what's in here. Picked up the credit risk reporting package, see what's in here. The BSA AML OFAC data, all of that data and the transactional data, that is so rich for not just measuring BSA risk, but for anything operations wise, right? That is the transaction ledger essentially, and there's a lot of stuff you can do with that. So that's another way that we looked at data and how to repurpose it and think about risk.
You articulated something there that certainly resonates with us, and given our strategic decision recently as a business to try and look at data more holistically. The fact that the risk team is really a consumer of this data and the results, and so it is having as much of that responsibility sit in the hub, if you will, right? We're getting this data into one place, getting the complete picture there, right? You can't actually have a holistic picture of risk if you're not looking at customer data and loan data and deposit data. Like, it's not just about BSA or AML or ALCO. And so I think that really hits home with me, that you go back to, Shawn, your comment there, that it starts with data, it continues with data, and it's going to be data, right, as far as the eye can see. And so having that philosophy or mindset as an organization, that this is the hub, and that your example there, Joel, of saying, hold on, no, we want to put our resource towards getting that hub as robust as it could be, right? As you said, Shawn, right? The access to data, the workflows, the governance, all that should be done just as a core competence of the organization, and then risk becomes a single use case.
Absolutely.
You guys have given us a lot to process and digest here. I know we're gonna drill a bit more into the risk management use case in a follow-on conversation, but I think hopefully this gives our audience an opportunity to think about the importance of data. Think about, right, how that is just fundamental to a financial institution. It allows you to punch above your weight. It allows you to innovate and differentiate in the market. Probably allows you to operate a lot more efficiently. But then, right, you made a comment there, Shawn, earlier, that the fourth thing on that list, right, access to data, workflows, and governance, with all that stuff in place, then you lean into the things like AI and technology to optimize processes. So this has been a great launching point for people to understand the why behind you do it, behind why you do this. And then Joel will talk a little bit more about the what in the risk management space in the next conversation. So Joel, Shawn, thank you very much. I appreciate your time.
Happy to be here. Thank you, Ed.